Hi, my name is Bailey Fleming, and I work for Golden Eagle of Arkansas. I am the staff accountant, and I am doing a presentation for my Capstone course at Arkansas Tech University. I was unable to record my presentation that I presented to the stakeholders at my company, but I'm going to recap my presentation now, and I think that's even better because now I can fill you in on some of the decisions that we made as far as what we're going to actually implement actually starting in January. So, a little background on the company. We are a local beverage distributor. We distribute mostly Anheuser-Busch products, so we do a lot of Budweiser, Bud Light, things like that. We also have a few other things like Monster energy drinks, but we are the supplier for Central Arkansas, so we're a very large business. And coming on to this new position in April is when I started. My first thing that I noticed is that they don't have a good way to track their cash flow. And by that I mean my job specifically is to prepare monthly compilations or monthly financial statements for shareholders to look at, and they use these statements to make business decisions and investment decisions and all kinds of things like that. And they have millions of dollars in the bank and they don't have a good way to reconcile their cash. The biggest thing that I noticed is every single day, Monday through Friday, we have large deposits that go into our bank. We also have large amounts of money that are drafted out for our inventory, but mostly the problem lies with drivers coming in and filling out their deposits, and those deposits go to the bank the next day, and we can have variances either from the drivers filling out their paperwork incorrectly, or maybe one of our customers has written a check for the wrong amount. There are a lot of reasons why cash can be either off from what we said it was going to be, or our accounts receivable can be off from what it should be. The problem is the only way they were reconciling cash before, they were using a very simple spreadsheet at the end of the month, and they would kind of take a number from our software that said, this is what we've recorded as going to the bank, this is actually what's in the bank, and this is our difference. And that difference was usually very large. It could have been in the thousands of dollars, which we are talking about a large amount of money, so it's a small percentage, but there's no reason when you have a staff accountant and a controller at a company to have this kind of issue. A lot of other reasons why this has become an issue is they've had a lot of turnover. The controller that I work for, she's only been there since last October, so this is an issue that she has already been experiencing and hasn't had the time to really think about a whole lot because she's been trying to nail down other issues. So that's kind of where I came in, and not only is it my job to make these things better, but this course kind of coincided with this, and I use that as my problem in special problems. So the first problem that I identified was that each month we had too large of a variance in what we said we had in cash versus what the bank said we had in cash. That's the first problem that I identified. My suggested solution was, instead of doing just one rough monthly reconciliation, was to do a daily reconciliation, which might sound tedious, but in actuality, you can make it very efficient and very quick, and it would make the work at the end of the month quite a bit simpler. My suggested method was to use a spreadsheet daily. We have a lady that is over our accounts receivable department, and when our drivers come in and they give her their deposits that are going to go to the bank, she records them. She logs in how much each customer has paid, and she puts it into our software, so our software records what cash we should be receiving and applies it to the correct accounts. I've suggested that in addition to doing this, she keeps a spreadsheet that tracks each driver's route and how much their deposit was supposed to be for each day. So she will log everything that should go into the bank, and these drivers' deposits, they go into separate bank bags, so everything's nice and separated. And then the next morning, I come in and I pull down the bank activity for what cleared the day before, and I can go in and put in the spreadsheet in the next column what actually cleared the bank. And then I can have a formula in the very next column that would show any variance between what we said went to the bank versus what cleared the bank. This is helpful for many reasons. One, we can see variances as soon as they happen. And in our company, drivers are supposed to be responsible for any variances in their routes. If they are supposed to go collect a check from Walmart and Walmart short pays them $20, it is the driver's responsibility to either go collect from Walmart or to pay out of their own pocket. And that is something that is supposed to be kept track of, and because of the turnover that they've had and the lack of leadership that they've had in the past couple of years, that hasn't really been implemented very much. So this will identify outages immediately. And then also at the end of the month, when we go to reconcile the monthly bank statement, we already have a list of any outages that have occurred over the month. So we should already know where our variances lie. Another reason this is helpful is this helps with our accounts receivable department. This isn't a department that I work with a whole lot, but I have heard when I was doing my interviews and my research with other employees that this is an issue for our accounts receivable department, keeping track of what routes have cleared short or what accounts owe us money or have short paid or have overpaid. So these spreadsheets would really be instrumental in keeping track of cash flow and accounts receivable at the same time. That way, like I said, the variances will be minimal by the end of the month and we'll already know about them. One of the bigger issues that we also have, and is the reason why the bank reconciliation hasn't been very efficient, is our software. Our software is geared towards inventory and accounts receivable. It's not really geared toward accounting. It does have accounting functions. We do run our financial statements through this. I mean, it does keep track of their balance sheets and income statements and things like that, but it is not synced to anything like QuickBooks or Peachtree or any other kind of a specific accounting software. It is actually very, if you went into it, you'd see it's driven by manual commands. It's very similar to DOS. It's very efficient for tracking inventory and those types of things, but it's not very helpful for doing accounting. So that's another problem that I identified, and my suggested solution was that we import or export the data out of this program each month into an Excel spreadsheet, and we can sort from there, and we can form a somewhat organized bank reconciliation. I learned how, in the software, since I've been there, I've learned how to export data. So I can go in and I can select October 1st through October 31st, and it should pull through all deposits and drafts from our account. It should show all banking activity in and out. So I can export that data, dump it into an Excel spreadsheet, and then I can sort it from there. I can have a spreadsheet that is strictly deposits, a spreadsheet that is strictly checks, and a spreadsheet that is just for drafts. And then I can go down our bank statement, which is about 20 pages long, but by doing this I can go through our bank statement and I can check off what deposits have cleared, what checks have cleared, what drafts have cleared, and then I can also see any variances that are there. And ideally, any variances that I come across should match up to the daily reconciliation spreadsheet that we've created. And we should be able to say at the end of the month, okay, well, we're out, $25, but we know that $5 was from October 3rd because route such and such didn't clear correctly, and we're out this $2 because of this, and we should have that all tracked, and we should know whether we're expecting that payment or that money to come from a driver who's going to reimburse us because his route was short, or whatever the circumstance may be. But ideally, at the end of the month, we should really have it down almost to the penny what our cash in the bank is. So my meeting with the shareholder, or actually I had it with our controller at our company, went very well. She was very excited to have someone that has been able to give this the attention that it deserves and that it needs. And we are in the process of putting these spreadsheets together right now and trying to find the ones that are the most efficient and the most user-friendly, because our accounts receivable department, they're not accountants, so we want this to be user-friendly for everyone in the office. We want it to be a functional tool, and she was very excited to get working on this. We're trying to work on this through the month of December and possibly implement this starting January 1st. So that is my presentation. Thank you.